Welcome back to Vantage. Now, there was a chart that really struck me from last year, which was that the European financial sector actually outperformed the Mag 7. And I wanted to get a financial specialist in on the show. Delighted to have got a leading light in this area. Let's go take a look. Welcome back to Vantage. There has been a sector that has quietly been outperforming over the last 5 years. Delighted to have a specialist who focuses on the financial sector. Welcome to Vantage, George. George, can you start by giving us a little bit of background to the Polar Capital Global Financial Trust, its history, objectives, and also the team that runs it?
Thank you. Yeah. So the trust was launched in 2013 as a way to give investors diversified exposure to global financials. It invests across financial subsectors, primarily listed equities, but can also invest in fixed income and unlisted companies. There are no constraints by market cap and invests in both developed and emerging market financials. Worth noting also that there is a 100% tender offer every 5 years at NAV. In terms of the team, we are 5 dedicated to looking at the sector within Polar, so well-resourced team, and we also benefit from the wider experience within the Polar Group.
Okay. Now, financials, if you look at any major indices, financials usually makes up a significant sort of constituency of the indices, often neglected by the average, either because of the complexity, perhaps the hangover from the financial crisis. What can you tell our listeners about in terms of why they should consider getting exposure to the financials and why they should consider using a specialist effectively to get that exposure?
So financials is the second largest sector, accounting for around 17% in global equities. So, in and of itself, it's an important sector. It's also been outperforming. So over 1, 3, and 5 years, it's outperformed broader markets. So there has been a reassessment of the sector going on. It's a very diverse sector. So it includes banks, insurers, payment companies, which came into the sector in 2023, and diversified financials, which range from exchanges, asset managers, consumer finance. And these different subsectors, they're driven by different economic and pricing cycles. So for an active sector specialist, that provides opportunities in what can be a complex sector.
Okay. I'd love to understand, actually more looking forward, what are the drivers of that outperformance? What are the key themes that you're currently focused on?
Yeah, so we're invested in both cyclical and structural themes. So on the cyclical side, we see tailwinds for European banks. They've benefited from a more normalized interest rate environment, and that's fed through into a high level of capital return, around sort of 9 to 10% of market cap return per annum, and they're still attractively valued at around 8 times earnings. We also see support coming through from a shift to a more pro-growth regulatory regime. We think that should help both European and US lenders. On the structural side, we see long-term growth opportunities related to the monetization of data. So that should be supportive for areas like exchanges, information service providers. We also see long-term growth opportunities for online trading platforms. We're seeing that at the moment with elevated volatility. But longer term, we think they should get support from themes like democratization of retail trading. And lastly, we're positive on certain emerging markets like India, Brazil, and Mexico. These are areas where penetration of financial services is low, and that's combined with being able to invest in very high quality private sector companies that have delivered good returns over different cycles.
Okay, and if I can just pick up on that, you mentioned European banks as a follow-on. I think one of your best performers was an Italian bank, effectively, but it's still on a sort of low PE relative to a lot of the other markets. What is that UniCredit that you hold?
Yeah, so UniCredit is a core holding within European banks. It's delivering good returns, sort of high teens return on tangible equity. Still trades at a low PE, around sort of 8 times. It is part of consolidation that is going on in Europe at the moment. I think even today we've had some news around its stake in Alpha Bank. It's looking to consolidate in Italy, potentially in Germany as well. So it's part of a change that we're seeing within European banks at the moment. Okay.
We've had a sort of pretty choppy first quarter this year, particularly on the sort of back and forth on tariffs. How has that had any impact on you? How have you repositioned the portfolio since the announcement of the US tariffs?
It's certainly been a volatile period for markets. we've added to subsectors like exchanges and trading platforms that are beneficiaries of that elevated volatility. And we certainly see that come through in their first quarter numbers and guidance they've given for April. We've also added to certain emerging markets which are relatively immune to some of the tariff noise. So countries like India, more domestically demand driven, an area that we've added to. That's primarily been funded by reducing our US lending exposure, just reflecting some near-term macro uncertainty. All the volatility has also thrown up some valuation opportunities to bring into the fund some really high quality names that we followed for some time. So names like HDFC Bank, LSE, Fineco. So the volatility gave us a chance to improve the quality of the fund.
Okay. Now, you mentioned earlier that the sort of 5-year tender offer, but you're looking to, it looks like you're making the trust more appealing to the ordinary investor, particularly around the sort of changes to the fee arrangements and also the dividend policy. Could you talk to us a little bit about what's driving that, what those changes are?
Yeah, so we've reduced the fees on the trust by moving to a tiered fee structure. So fees are reduced on AUM in excess of 500 million. Half the fees will also be paid on the lower of NAV and market cap.
Okay.
We've moved to an enhanced dividend,
Yeah.
so paying 1% per quarter with a potential to pay out of capital if required. And I think that move to a new dividend policy gives additional flexibility on where we can invest. And so we can be a bit more tactical in terms of our fixed income allocation, which can be up to around 10% of the trust.
Okay. We've touched on the fact that financials have outperformed the wider equity markets over recent history. If you're looking ahead, what gives you confidence, effectively, that outperformance is going to be sustained? What are the factors driving that?
I think it will come with a sort of recognition and confidence that we're more likely to be in a normalized period for interest rates and inflation. And I think that has significant consequences for value sectors and financials in particular. And that would mark a real change from that decade we saw post the financial crisis, when they had these experiments with negative interest rates and monetary policy. The sector remains attractively valued at 12 times earnings. Operating trends are robust. And it's one of the few sectors year to date to see earnings upgrades. So in terms of the setup for the sector, I think it remains very attractive. And so more of the same should be supportive in terms of relative performance. Should we get clarity in terms of US tariff policy and evidence in terms of regulatory easing, I think both of those would be additional catalysts.
So it's been a fascinating run through, effectively, on what a sector that we don't often talk about. We will track the performance of the trust over the sort of coming year. I hope the outperformance continued. George, thank you very much for coming on Vantage.
Thank you very much.
If you want to hear about any other sector or another trust, please do drop me a line. Thank you very much for watching. Looking forward to seeing you here next time.